billion of exports. We hope that will be about over $70 billion by the time we get to 2030. So it's a sector that's doing incredibly well. It's growing really well. We're getting our products out to markets. As I said in my remarks, first time in 5 years we've got a trade surplus. And when we look at April, our record trade surplus month of $2 billion, which means that we're exporting more to the world than we're importing. But with that, have a take your question.
Experts were expecting closer to $60 billion, or at 64.3, I think. I mean, was that an optimistic surprise for you?
Well, look, I mean, we know how hard this sector's been working, and whether it's been dairy, whether it's been red meat, whether it's been our horticulture sector, whether it's been our wool sector, they're doing really well. When you think about tourism up 9.5%, when you think about international education up 11.2%, that's what's actually driving our exports growth, and it's obviously greater than our imports, and that's always good for New Zealand. Yeah,
and in terms of the mood here, we discussed it yesterday, but we've got the dairy farmers with a little cash in their pocket from that mainland sale. Dairy prices very high, wool at a 15-year high. Is this the best that it gets for the rural sector? I mean, there's a lot of optimism around here.
No, we want to grow even more. We want more ambition, more aspiration, much more growth as a result, because the world is rapidly moving into the middle class. That creates a huge opportunity for New Zealand. So really the only limits we really place are those that we put on ourselves, frankly. It's really about us getting out there, getting very familiar with the new markets now. You're seeing a much more diversified set of markets we're selling into. Our exporters are very agile. They've really learnt these markets well. They can move out of one when it's more challenging and go to another. But no, it's a really positive environment here. And I just huge praise to the people in this industry. I mean, in the sector, they do an incredible job. And I think also we've done our job as government of getting the settings right so that we can enable that growth to take place.
During your speech a couple of minutes ago, you talked about the importance of environmental factors in marketing our products overseas. Could you be more specific? What particular environmental measures has New Zealand taken that give it a comparative advantage?
Well, our comparative advantage, we produce the highest quality, safest food anywhere in the world, and we're seeing consumers not only want it, they're willing to pay a lot more for it. Our big challenge in the coming years is how to produce more. We now have more market access and demand from consumers than we're able to supply all around the world, and it's before you start looking at the significant opportunities that come from the India Free Trade Agreement. And so yesterday we announced a land use flexibility, helping Kiwi farmers and growers to feed the world. And what that says is we're going to find ways, working with the sector, the private sector, to continue to meet environmental obligations, but at the same time to produce more. There are countries of the world, the last Labour government, that said the way that you do these things is to shut down farms and produce less. We have an obligation to feed people, and the way we make New Zealand richer is to produce more to sell, but we have to do that hand in hand with better environmental outcomes.
Prime Minister, Treasury this morning says it's going to cost $5 billion net offshore mitigation that's 50% target. Can you please show us $5 billion of business?
Absolutely, we are not sending billions of dollars out of New Zealand. We are committed to net zero 2050. As you know, we're on track to deliver that. We've aligned our NDC 2035 goal to be aligned with our domestic commitment, which is net zero 2050. We're going to do everything we can around 2030, but just reassure everybody, we ain't shutting down farms, and we certainly aren't sending billions of dollars offshore.
How are you going to do it then?
Again, I'm just being really clear, we ain't sending billions of dollars out of New Zealand. Well, I don't think we will be doing any of that.
How will you meet the target in that case?
We're going to give it a good go. I think there's going to be a real challenge in the next few years for many countries around the world around the NDC 2030 commitments. But as I said, we signed up to a new 2035 commitment, which is now for the first time aligned to our domestic goals. That makes sense. But we're going to do everything we can to hit 2030. But I just want to reassure everybody, we are not shutting down farms like the last government wanted to do. We are not sending billions of dollars offshore. We will do everything we can to meet that commitment in 2030. We've got a wee way to go.
There are other options though. You can look at other sectors besides farming, right? That's only 50% of our emissions.
Yeah, but I'm sorry, we want everything growing in this country. I want the tech sector growing. I want the primary industry sector growing. I want tourism growing. I want international education growing. It's foot to the floor. We're going to flat out grow the joint.
So if no one's going to cut anything in that case, no one's going to cut any emissions, we're just going to keep on growing.
No, I mean, look at this sector here.
Not
This sector here is able to lower its emissions and increase its production at the same time through the adoption of technology. When we came to power, we had Agri Zero, which we've put more money into. We've turbocharged that. A lot of ideas. We've now got real projects that are really going to make a demonstrable difference on, say, for example, emissions. But I want to be clear, we're not here to chase emissions reduction as the end goal. Our goal is growth in this economy and growth in this country. We do not have the luxury to turn off growth, which ends up meaning that people don't have incomes and people lose jobs. That's not happening. This is a great country. We can make this more prosperous. We've got to raise the floor and lift the living conditions for everybody. Everybody in this country works incredibly hard, but for 30 years we've failed to deliver on expanding economic productivity, and that's what this government's doing. We're fixing a lot of the basics, but we're building out a lot of the things on education, the science sector, infrastructure, red tape, trade and investment, the 5 big things that will lift the standard of living in this country. So that's what we're focused on.
Prime Minister, would you consider pulling out of the Paris Agreement?
No, coalition government, we believe very strongly that actually New Zealand coming out of Paris is actually really will disadvantage us, because essentially other countries that we compete with in primary sectors will use that as an excuse to kick our products off shelf across supermarkets around the world. And likewise, the large dairy multinationals that actually buy our products and services would do the same. So for us, it makes sense for us to be in Paris. We will do everything we can around NDC 2030. As I said, 2035, thankfully, we have realigned to our domestic goal, which is net zero 2050. We're making good progress on that. You saw some, last year we thought we might be delivering that a bit earlier. But we can actually grow our country, and we are focused on growth. And as a result, we can actually grow and also be more sustainable in due
Do you
course.
see that it might be contradictory, that you're not saying that we will meet our obligations under the Paris Agreement, we're still sticking to it?
Well, we've said it's very difficult from the very beginning, but we should try to meet all the obligations that we have internationally. I just said to you, I think when James Shaw and Jacinda Ardern went off and set a target for 2030, they got disconnected from our domestic track on target and emissions reduction. That wasn't right and that wasn't fair. Having said that, we'll do everything we can. But I'm just acknowledging that we ain't sending billions of dollars offshore, and we're not going to make this country poorer as a consequence of it.
Do we know what the consequences are?
Yeah.
That's a $2.5 billion sector as it is at the moment. Do you see that becoming a standalone part of the social report one day, becoming like a $30 billion industry itself?
Yeah.
What are you doing to help that?
Yeah, look, I think there's 2 parts to that, Corin. I think one is, yes, you could argue whether it's a standalone subsector within the broader agriculture sector, but actually it's also infused in the DNA and the bloodstream of what each and every other existing sector does today. So when you start to think about what's happening with respect to dairy or sheep and beef, and you think about the virtual fencing companies, whether it's Gallagher's or whether it's Halter, that are doing some great work in that space and creating technology platforms actually for agriculture here and around the world, that's a huge opportunity for us. And that's the way I want New Zealanders to think about agriculture. Come to field days and see it for yourself. You guys are seeing it while you're being here, that there's so much tech applied into the sector. That's what's going to make a difference for us.
Will you regulate it? Because there is talk of the need possibly to regulate it.
Well, no, not at this point. No, we're very comfortable with where it's going. I appreciate there's people on all sides of that debate, but no, we're going to push forward really hard on it because it's a Kiwi invention. We're doing well here adopting the technology here in New Zealand. I met with Todd and I met a couple of months ago actually with a husband and wife team who are about to walk off their farm in 2021 in the Waikato here with Hill Country. And because they were able to introduce virtual fencing, they essentially could get so much more productivity. And as a result, have done an exceptionally good job actually bringing that farm back to life and getting the margin structure right. You're seeing in the SOPI report we're growing revenues, but we're also growing margins and profitability. And so a lot of it is the story of New Zealand for the last 150 years. We've constantly adopted and used technology better than other countries, and we've got to continue to do so.
The government has in the budget a $450 million contingency fund around transport. Given Labour's cost of living announcement yesterday in terms of capping fees free, are you planning to do anything with that?
Capping public transport, not fees free.
Are you planning to do anything similar with that specific fund, that 450?
Look, we'll look at what we need to do. As I said, this conflict's unpredictable. As you see, in 24-hour period, it can go from we're getting to a resolution, we're nowhere near a resolution. So, really for us, it's watching what happens over the next wee while. We've put the $450 million aside just as a prudent, responsible contingency in case we need it down the road. The lens by which we'll deploy it, and we haven't made decisions about any particular initiatives at this point in time, but again will be based on the timely, targeted and temporary support that's needed. But while also keeping an eye on our fiscals to make sure we're doing as least damage to inflation and growth as we possibly can.
Examples of things that fund?
No, I don't want to go into that now, but rest assured the reason we put the money aside was for the same criteria by which we've done the in-work tax credit, $50 a week for low and middle income working families. The same reason we've looked at, say, health and community workers and relief teachers as well, with increasing mileage rates. So
is there a scenario where it just doesn't get drawn on at all?
Well, depending on what happens with the crisis, and that's a volatile and very uncertain, unpredictable event as we've all been dealing with. So, it's been good to see. Certainly, diesel's down, I think, 55 cents from the highs that it was 5 weeks ago. And as you can see from our reporting in April with the trade surplus, a record trade surplus, that we're managing to get our products out through markets and get good returns for that. But again, we stay very mindful, and that 450 million set aside. So if we need to use it, we will use it. But we'll do it in the same criteria that we've used it for everything else we've done thus far.
So if you did use it on public transport, it would be a temporary support as opposed to labour, so just
well, our lens and the criteria we established from day one on this crisis was temporary, timely and targeted, because we're freely admitting that given Labor ran the debt from $60 to $180 billion and creating a $9 to $10 billion interest bill, we've actually maxed out the credit card, we've used up the rainy day fund, and we need to be responsible with New Zealand's economic trajectory and our fiscals as well. So, we rest assured we'll use the same criteria for the 450 million if we need it.
Prime Minister, can I ask you about the LNG facility? So there's this MB modelling that shows that there was no real need for it. So why are you going to put money into that facility?
Well, we have a very simple problem in New Zealand. The last quarter we ran at about 94% renewable electricity. In the last quarter we had the lowest level of emissions in this country since 2010. So, and part of it is that in the last 18 months, 2 years, we've done more renewables than we've done in the previous 10. And that's because we've done things like fast track, our RMA provision changes are really helping to make renewables much easier to get done and get approved and get the benefit of to our system quicker. So we've got a massive renewables boom on one hand. But the problem in our system is dry year risk. And the problem with that is that every 4 years or so we get a dry year where our renewable system is not as robust as it needs to be. And that means that we end up putting higher power bill prices into New Zealand because of that risk premium that sits there. So by actually saying and we do renewables, and we actually put a $1.4 million strategic coal reserve behind Huntly, and we actually create the diesel strategic reserve, and we actually create an importation facility for LNG. That is a much better option for us, because it's lovely what Labor and the Greens did. Wonderful. We'd all love to end the oil and gas ban. Wonderful. We'd love to get out of fossil fuels. Get it. But actually working people lost their jobs because mills couldn't get energy, and as a result they shut down services, and people lost their jobs. So if you care about people, you actually have a sensible energy policy that actually means they can continue to keep employment in regional New Zealand, which is what it's about. So the LNG facility, as I said, is an important element as a backstop for dealing with the dry year risk. Interesting when you look at forward curves on electricity, which is where the risk premium sits, you can see since we even announced it, it's down like $20. And that just speaks to the fact that it's the right strategy to do it.
Meridian says you don't need it. Meridian was told they don't think LNG is needed.
Yeah, well, the gentailers have lots of views on lots of different things. We're the government, we set the energy policy. What we've had is a failed policy from the previous government. The gentailers can have their views. They've got lots of self-interest as they would have from their system, but we're making sure that it's an and. We expect...
Does the LNG get used for gas production or businesses, or is it only for dry year?
No, it'll be available as a backstop for when we need it. But what we can't have is $800 megawatt per hour, which we experienced in 2024, leading to that deindustrialisation. Even if you do imported gas today, say at $200 to $250 megawatt per hour, that's a hell of a lot better than being 4 times more expensive in the situation we were in 2024 because of the policies of the previous government. So it's there as an insurance policy for us. We'll use it when we need to use it. But actually having that resiliency in a world that's really volatile and uncertain, we need to build more resiliency, more national security, more energy independence here at home. And on energy, I just want to say, because I think the focus and the frame under the previous government has been about emissions reduction and about climate change. That is a means to an end. We are interested in energy independence primarily, and so that's why we will have a coal reserve, and we do have a coal reserve which we've put in place behind Huntly if we need it. We will have an LNG importation facility if we need it, but we are not going to have people lose jobs and growth in this country slow down at all.
Right, thanks, everyone.
Okay, thanks guys, have a good day.